Good evening. This is the Eye of the Storm podcast with the big picture, technical picture for the 30-year bond and the 2-year note. Taking a look at the 30-year bond, the market continues to work its way lower in what I will be counting as a minor fifth wave down here in the 30-year bond. And what that will be completing will be an A wave. I got to go up one more to show it. Working an A wave to complete 5 waves down, which cleaned up a lot of some noise that I was seeing prior, thinking that this October low completed that A wave. Under further review of what was going on and how the market was acting, I shifted the count to where it was a minor 4, and we're working our way lower in a minor fifth wave, which continues to suggest that we will ultimately move rate-wise probably closer to 4.5%, maybe even 5%, before we get into a larger intermediate degree B wave, at least intermediate degree B wave, which will take bond prices higher and yields lower. Now, that's still yet to come and begin. So I'm thinking that we still have a little bit of downside, and eventually, and I will show right now on that longer term picture, let me just show you where we have the possibility of dropping into. And that would, again, I need to go back out. Sorry about this. But I got to be able to count my third wave into my fourth wave so I can get my fifth wave. And then I will also put in one more down this way and then put that all the way over to my fifth wave, and we'll see what we match up. In fact, I'll take this one out right now and just leave this one in. So what we're basically looking for within a minor fifth wave is for the market to come down and to at least do 618. So ultimately, I am looking for wave 5 to create a new low below wave 3, and wave 3 on my daily chart is marked at 118.07. So I'd be looking for a new low below that within minor wave 5. Well, then I look at my fibs that go along with the minor wave 5, and minor wave 5 would be equal to 0.618 of minor wave 1 at 115.29. which coincides with approximately about, I think, 4.5, 4 and 3/8 to 4 5/8 within the 30-year bond, the rate, possibly as high as 5. Again, I'll show you that in just a second. Then below that, if we go with equality, we're looking at 104.14. So again, not understanding that there are forces out there within the economy, within the fundamentals, which I will go over in a different update. Yes, there are. So, but right now, on a technical basis, this is the picture, and these are the levels. And we could get a turn from most of them, from 0.618 on down. We can get a turn that would give us enough power to power higher and start to move up in a larger counter trend rally. Now, back down, and let's just take a look at, again, that big picture. Where are we within it? And on the 4-hour chart, we can see there's the 4, and we've got, so if we're in a minor fifth wave, what's inside? Going to be 5 waves of minute degree. We have 1 and 2 complete, likely the third. So we need to go down to my 1-hour chart. There's wave 2. So here's the internals for this third wave. And it may be complete right there. And that was on Friday morning, when the bond hit 125.05. Then we've got, we're close to a deal. We're going to make a deal. We're going to get this done. We're not going to default. And the bond market rallied. And then it continues to rally, I believe, on the fact that now we are getting that legislation prepared, and the House needs to vote on it, and so does the Senate. So the House needs to get it done first, get it sent over to the Senate ASAP, so that the Senate can go through their rigmarole. That'll cover moving out into the fundamentals. Technically, I'm looking at this low at 2505, 125.05 as being the completion point for a minute third wave. Therefore, we are in a minute fourth wave. Technically, we would look for it to go and finish somewhere in the price territory of the fourth wave of one lesser degree, and that's right here. So we're already almost back up towards those highs, which are about 127.08, and then we have some resistance at 127.11. Now, again, if we're just going to be tracking what we can call for this fourth wave, then we're going to want to add one additional layer. Again, this is kind of the big picture, but over a little bit shorter term, because what we're looking for again is this fourth wave. If we add that, we have these inside here, 0.382, which is 128.03. So we have that possibility. And what's going to give that away? Well, once we get above 126.31, we're going to have 127.11 in there. A break above those plus the 200s, which are just kind of just going flat right here at 127.03. So we have 27.11, which basically equals that almost that high from wave 4. So we have 27.03, 27.11. And then when it can get above all of that, then we got a shot, and it should be a straight shot to 28.03. And that would be our first fib resistance for a fourth wave of minute degree. So I'm not looking for a breakout from here. I'm not looking for a larger correction from here. That's the picture. Should it occur, we're going to have to back up and we're going to take a second look. And right now, the alternate count really does not fit necessarily, other than that we've got this wave 4 still going on, or whatever this corrective process is still going on right now. And what we've got is an ABC and then an ABC and an X. And then we're going to do it again. So I'm sticking to what my preferred count is right now. And that is that we will rise up within a corrective wave 4. There's our resistance levels. Then we will continue to move lower. Fundamentally, be taken care of in another update. Moving over to the 2-year note. Also interesting, an interesting market. Oops. Let's try that again. In that we did get this very large gap, and I believe that was basically the change in the contract, because I am charting in the September contract. That gap was the difference between the June and the September. Nonetheless, I do feel that the low that we put in last Thursday into our close completed this minuet, wave 5, the minute wave C, and minor B wave. So let's go back out and take a look at that larger picture again on the daily chart. I feel that the 2-year note has bottomed in its intermediate A wave, and we're in the process of an intermediate B wave. So again, how that fits into the larger picture is that while we still likely have to leave open the possibility that the 2-year note will decline a little bit, but I think that the 30-year will go lower, not necessarily as the 2-year would follow to additional lows. We will include them. Right now it stands at 101.308. We could drop all the way to 101.091 and still consider it a B wave. Right now, I'm looking at it a little bit differently, considering that B wave is complete, but we have that still out there, and it would not change the trajectory or the little bit longer term picture that we're getting close to completing a C wave, or getting ready to start, I should say, a C wave up to complete the larger intermediate B wave. That's the big picture. So while we leave open the potential that we might drop one more time, and that would be in conjunction with the 30-year taking a little bit of a hit to the downside and finishing that minor fifth wave. So again, in the 2-year, what are we looking at? If the upside were to continue, I'm going to go back down to the 1-hour chart now. All right. If we're going to count this as a possible 1, 2, we should break, hold this level, break back above 102.216, and then just start to run. I can't actually, even on the 1 hour, put much more in than just taking a look at this to see where it can come down. Right now it's gone to 50%, so we know 618, 102.095, 70, which is the sweet spot for bond. The market, based on an old SPX, market makers, one of the levels that they did hug, and it is kind of applicable because the bond pits are about as old as the SPX pit. So a lot of the same type of market making. 102.073 is 75. And then we get down all the way to that 102 area. And that really should hold. If not, we're shifting all of this to a different level. And this would have gone too high for me to kind of include it. But we might have to. And so then we would be looking for additional. And here's some additional levels. So this could be all part of it, where that's an A wave and we're going to get a regular B with inside of this move. And still we still have the potential where the market could drop, put in some additional new lows, and then still put in that stronger rally. So we get this crazy A, crazy B, and then the C wave just takes us to the moon. So that still remains. And that would coincide with what, if we were to see in the 30-year bond, that it is going to continue to drop in its minor fifth wave. The 2-year may just follow suit, but eventually the 2 year is going to outdo in terms of the rally. We've already seen that in the past, recent past. We saw it right there. So we can take a look at how many days it took to rally and how many days or how much time it took to drop back down in that B wave. So the C wave could be, if it's going to go up, I believe the C wave will be similar to that A wave. Bing, 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 and just go. So it could all be short-lived. We could see it could also be a part of a lot of different things. Now, getting back down, if I need to cover anything else in this technical, that gives us the downside. I can remove those. So if we're looking for it to break out from here, and again, I'm going to just put up, if this is 1 and this is a 2, and we're looking for this thing to catch fire, and then we'd be looking, oops, that's going to be kind of close. So anyway, we would find that support here, and then we're going to here. These are going to be resistance levels, 100%. We're looking for more. We're more like looking for 1.618, which it takes above 103. If we're inside the C wave, and then it's 1, and we got a 2. There's our 3, our 4, and then we get a 5. But the 3 can extend, and we see nothing of it right now. We're not even. We're postulating that if the market were to turn and continue to rise, it should do it in a very quick fashion, and it should break easily above these resistance zones. If not, then we have to leave open the potential, and that was the previous fibs that I just showed. We leave those open that the market could continue to go down and go sub 101.308 to finish what might be a B wave and still lead to a strong move up. And guess what? The moving averages are pretty flat on the hourly. If I move it up to the daily, let's take a look, see where they sit there. Kind of still rolling a little bit, rolling to the downside. The 50s rolling, the 20s rolling. We had the 4 and the 8 rolled, and then they perked up on the roll. So maybe you need to consider that this is we still only got the 3 down here. We're doing a 4, and we still have that minuet wave 5 to put in to complete the minute C, to complete the minor B. So those are both sides of that coin. And we'll find out pretty quickly, because I think they will follow each other. The 30 may lead, but I believe that the 2 will follow. All right. That's it for this particular big picture update. Thank you for listening. And I'm moving on. The next one up will be gold and silver.